What is up, everybody? Solomon here. Super excited to be with Genfinity, interviewing a multitude of builders across Web3. Talk about a bucket list interview. This is the first time I've had the opportunity to interview Grayscale. Grayscale is unlocking the power of digital assets globally, and we're joined by Ray today, head of product and research at Grayscale. This is going to be a really high-level conversation talking about four-year cycles, the maturity of crypto, blockchain, distributed ledger, how institutions and enterprises are looking at this space, how retail is as well. We're going to walk through your 2026 outlook as well, Ray, which is going to be awesome. But thanks for joining me. I would love if you could kick us off here with a little bit of an intro about yourself, your role at Grayscale, and yeah, thank you so much.
Thanks for having me on. I'm excited to be here. So I'm Ray. I've been with Grayscale since 2018, which is apparently a very long time in crypto. I lead product and research. When I joined the company, it was about 5 people, so it's been tremendously rewarding to get to build it to what it is today. And for those of you that are not familiar with Grayscale, we are the world's largest crypto-focused asset manager. We have over 30 products across 40 tokens, and we have been operating since 2013.
So I know that, I've seen this a bunch, and I know you put out a really good thought piece on this as well. I want to kind of get into market structure and the four-year cycle, whether it's a real thing, whether it's not a real thing anymore, just kind of your broad thoughts, and maybe give us an overview of the piece that you just put out. And I'll share a screen here in a second so people can go and read that as well.
Great. So from my perspective, I think that generally, whether it's investing or otherwise, the stories we tell ourselves are important. And since I've been in the space, we have been telling ourselves this 4-year cycle story about, how we have to have these bull markets and market crashes kind of associated with a timeline around Bitcoin's halving. And ultimately, it's become a self-fulfilling prophecy that is distorting investment behavior, because what you're seeing is that when we do have volatility, we assume that we're at the end of the cycle and we act accordingly, or some investors act accordingly, and that reinforces that narrative. But we know, right, just like in other asset classes, cycles don't happen on schedules. And when we look back at historical cycles, there was always some sort of macro trigger, not like a doomsday clock that is endemic to crypto. And, like it or not, crypto traded like other risk assets. And so for context, if we go back to like 2014, that sell-off started because of China's banking restrictions and liquidity squeeze from a pretty fragile market. 2018, you had global tightening and a regulatory crackdown that ultimately deflated the ICO boom. 2022, you have, the fading of post-pandemic stimulus, inflation was up, and you just had a total meltdown in risk assets, which ultimately bled over into crypto and triggered a wave of deleveraging that sort of proved catastrophic in the short term. So historically, there's always been exogenous factors, and the cycles themselves have also changed. In the early days, these cycles were very short, very steep. I think the first one lasted under a year, the second one about 2 years. You had prices that were up about 500x from their prior low. And over time, the later cycles lengthened and softened. And so every time you had less volatility and more infrastructure. So, where are we today? When I think about where the market is in terms of the backdrop versus even 2022, the shift is pretty dramatic. We are now living in a world where we have crypto ETFs, and I want to talk more about that. That are creating meaningful demand in the hundreds of billions of dollars that have opened up a whole new channel, the advised channel, to crypto products. We have the most favorable regulatory backdrop that we've ever seen. We have real infrastructure, custody, and we have an economic backdrop that's actually pretty good. Going into the next year, I think we're going to continue to see rate cuts, and we're continuing to be bullish. So I think as an industry, we have an opportunity now to recognize how far we've come and how much crypto has matured, and let go of these stories that have been kind of holding us back as an asset class.
Yeah, I think you bring up really interesting points. And I mean, for those of us that have been here for a while, it almost feels to me, just as a sidebar, like something's off. Like it's like, okay, how is everybody out there in the wild this bearish right now? Because almost on a daily basis now, there are multiple pieces of news for real world adoption that come out that during any of these prior cycles, 2022, 2018, would have driven 6 months worth of news. So like on a daily basis, we're seeing kind of the shift from crypto blockchain and distributed ledger as a disruption to the traditional system to crypto blockchain distributed ledger as an integration into the traditional system, which is pretty wild. You guys have put together an awesome 2026 digital asset outlook. I would love if you could kind of highlight some of the big picture stuff that's in here for us and why it matters for people out there to maybe not pay attention so much to what's on the mainstream news, which is so polarizing, but dig a little bit deeper into what's actually being built behind the scenes here.
Yes, and I think to your point, I think across asset classes, again, before I worked in crypto, I worked on Wall Street for 10 years. It's also always been a bit in vogue, and it's always, people have always felt like they look smart when they're bearish. Um, so for us, I don't agree with that. I have this kind of saying that I'd rather be long than right. Um, so for us, for 2026, I think we're looking at two structural shifts and two major themes that underpin what we're going to see. The first is macro demand for alternative stores of value and continued improvements in regulatory clarity. So I think as I said, I think we expect to see rising valuations in 2026, end of this 4-year cycle narrative, and we do think that Bitcoin is going to reach a new all-time high in the first half of the year. We also feel that from a regulatory perspective, we're going to continue to see, we're going to see bipartisan crypto market structure that is going to continue to be helpful and continue to see sort of worlds kind of come together between deeper integration around public blockchains and these traditional incumbent players in the financial world. We think that given the backdrop geopolitically, the outlook for fiat is going to continue to be increasingly uncertain. And then when you look at something like Bitcoin, we know for sure, we know programmatically that the 20 millionth Bitcoin is going to be mined sometime in March 2026. So I think we're going to continue to see investors turn to Bitcoin as digital gold, as a store of value, and as a debasement trade. And then I think that we're going to continue to see more crypto ETFs. In terms of 2025, this was this is a banner year for regulation around ETFs. We have moved from a world where we have just Bitcoin ETFs, Ethereum ETFs, to in September when the generic listing standards came out that essentially created a framework for other altcoin ETFs to exist and to be brought to market without filing a 19B4. And they've also allowed for staking in ETFs, which I want to talk more about later. And so I encourage everybody to take a look at the report. It's on our website. And we also highlight the top 10 crypto investing themes for 2026 in that report.
I think that's absolutely awesome. Yeah, and let me share screen again here before we get too deep into the weeds, because this is publicly accessible. And I know a lot of the times, especially across crypto Twitter and some of the great resources out there, there's a lot of problems and kind of misinformation, but real information, such as what's on Grayscale's site right here. And you can go to view research and you can find the 2026 digital asset outlook, dawn of the institutional era right there. Click and you have a wealth of information right there. Ray, do you think, it seems like, and as you mentioned, a lot of this stuff, probably coming off the back end of a little bit clearer cut regulatory clarity in the United States. Certainly the Genius Act. I know that we're all waiting on the kind of the market infrastructure bill. But even when you look at guidance that is kind of being drip fed from like the OCC, the Office of the Comptroller of the Currency, I I'll like do videos and I'll see like guidance letters come from the OCC that are like to another bank that's like, you've always been able to do this. But we know that that hasn't been the case. I think most recently, a week ago, it was banks can buy and sell crypto on behalf of customers, which is just absolutely crazy. But what are your thoughts on what stablecoins actually opened up for this industry? And is that kind of what's gotten us across this line for adoption? Is this what we've been waiting for?
I think stablecoins are structurally important. It's to me a really compelling use case of effectively tokenization. And I think they've created some very important off ramps and on ramps onto crypto.
Yeah. So I know that you were just in Abu Dhabi, which is always so interesting that everybody's super busy traveling around the world, especially, close to the end of the year. And I know how busy everybody is here. But what was the experience like? I think one of the biggest financial conferences in the world was going on in Abu Dhabi, while simultaneously you were at Solana Breakpoints. Talk about what the experience was like at both, I guess, the Abu Dhabi conference and then also Breakpoint.
So I was lucky enough to be working across 3 conferences and doing speaking engagements. I went to Milken and then Abu Dhabi Finance Week and Solana Breakpoint. And, there's a ton of Solana Breakpoint events. It was a great trip. It was a very exhausting trip. At Milken, I spoke about tokenization. In the Solana ecosystem, we met with like over a dozen protocol teams in the Solana ecosystem that are building really interesting things across DeFi, infrastructure, and DePIN. Breakpoint, this is my first Breakpoint, and it was such a well done, such a high energy event that, really showcased the rich and fairly diverse ecosystem around Solana and the developer talent. And so, Solana in and of itself from an investment perspective is very exciting for us. This is a project that, I view as really like a delight to use as far as blockchains go. I, use my Phantom wallet all the time. And it's as people ask me to, be onboarded into crypto or how can they get experience actually interacting with blockchains, it's what I recommend to them. Again, Solana is very fast. It's inexpensive. It's built for real activity. And you see that in the vibrant ecosystem that we witnessed in Abu Dhabi, but also just the metrics around transaction growth, stablecoin flows, trading, and payments. And so I think that in general, Solana is not just somewhere that there's assets are sitting. It's a chain that people really like to use to do things.
So I think I actually had the opportunity for the first time to interview Vibhu from Solana. I think it was in November, and it's always fascinating because the amounts of kind of retail adoption, especially on Solana, was really, really interesting. And I think one of the pain points that blockchain and crypto has historically had is like what are some of the real numbers for actual adoption? Like how many users are actually using something? Because if we get to kind of the mass adoption discussion, people actually need to be using the technology. But I would love if you could maybe talk just a little bit more. I mean, you mentioned ETF and some of the products out there, and I'll preface, obviously, not financial advice from Genfinity's purview, but Grayscale deals, and kind of you guys are the biggest entity out there as far as a lot of this is concerned. And what does that look like as far as Solana is, concerned, and some of the other kind of entities as well?
So we've had a Solana actually before ETFs. We had a Solana publicly listed product on OCC markets for a couple of years. And that was the first product to stake Solana, which is exciting. We have a Solana ETF today. And I think across the board, these products have been very successful. They have amassed a lot of flows, and it's shown us that there is real investor demand for Solana, not just from the retail channels, but also from the wealth and institutional channels. I'm also delighted that we are able to stake in our Solana ETF and offer a reward of over 7.4%. To me, we are now structurally at an age where crypto is an income producing asset. And so we need to reflect that income stream in financial products that we build. And as we talk to investors, they're thinking about crypto in terms of being, wearing different hats. So for instance, it's a store of value asset in some cases. You have that technology upside, you have the diversification benefit, and now you have, the income stream.
So I think I'm glad you brought that up, because I kind of think along those same lines, and this is just total personal opinion. I know a lot of people freak out about what the market's doing every second, every hour, every minute, whatever. But I look at where, blockchain, distributed ledger are going. And I think there's going to be a future where you're going to be able to leverage your digital assets. And just like the ultra wealthy do right now, traditionally, no, they're not sitting with, maybe they are, but bags of fiat under a bed, like you're going to be able to start actually leveraging your digital assets. Like that's what tokenization is going to open up. That's what the democratization of all of these markets is going to open up. Can you maybe talk just broadly, am I totally off base in my assumption there that that's the future we're heading towards, and just your broad thoughts on where digital assets go as an asset class, not just a, every second trading speculative thing?
No, I think you're absolutely right. So again, we're seeing when I started in the space, it was like 2018 and people were literally talking about tulips. I went to Singapore for consensus. People were, dressed up as dinosaurs. And now, we're having meetings with institutions who have, maybe they've wrapped their head around Bitcoin. They understand smart contracts. They've like thought about Ethereum. And so they look to us because they are thinking about diversifying beyond just the core exposure. And the problem is that, if Bitcoin is 50% of the crypto market cap, there's a whole other 50% that allocators, advisors, investors need to understand and wrap their head around. And so we're seeing that interest, and we're out there trying to create compelling exposures and also educate investors around what that looks like. ETF wrapper specifically, I think, is very helpful in terms of just from, as you said, a leverage perspective, because now you have the opportunity to own crypto through these traditional channels. And also investors can take their crypto exposure, and if they own it through an ETF, they can get leverage through their prime brokerage, the same way they do on any other equity position. So I think, to your point, that opens up a lot of doors.
So I think what's also to your point, as far as like the core, I mean, I think most of us, well, at least I know my story of getting into this space. It was very Bitcoin and Ethereum centric in like 2016. And then you start learning about this space. And one thing that I think is very clear to those of us that are paying attention, and it's kind of the infrastructure over just speculation and over just pure narratives, where you look at some of these protocols or some of these platforms or some of these layer ones, and they are like deeply integrated with the traditional system. I mean, we literally had just like a week ago, DTCC saying that they're essentially going to tokenize all of their subsidiary, which is DTC's assets, which is like $1 trillion, which is crazy. And then you start looking at some of the entities that are involved with some of these bigger entities, like Chainlink rings a bell, and I've brought up Chainlink a bunch in some of my videos, where they certainly have integrations with Swift and DTCC and some of these other big powerhouse traditional entities out there. Can you maybe just touch base on what you guys are seeing from Grayscale standpoint, or even just you personally, from, as you mentioned, this kind of educational shift towards like, oh, there's some real infrastructure integrations going on that are, yes, maybe Bitcoin and Ethereum are still, have the lion's share of X, Y, and Z, but there's a lot of other protocols and platforms out there that are getting deeply embedded into, the traditional system, and the opportunities are massive.
The opportunities are massive, and Chainlink is a great example. It's one that I think it resonates well with traditional investors because it is that infrastructure layer, and investors understand that, right? It's the picks and shovels. They've seen that in other industries, and it's a layer that so much of the ecosystem depends on. And ultimately, it's solving a real world problem. Blockchains can't access real world data on their own. And, we've been excited about our G-Link ETF that gives investors exposure in the ETF format. And it's a project that has clear product market fit, visible on-chain usage, and it's a role that really spans multiple blockchains. And I think that's pretty compelling for investors. Fills an important gap for allocators who want exposure, crypto exposure that's tied to real economic activity. Um, and because of the interoperability work that Chainlink is doing, it is a way, exposure to Chainlink is really a way to get exposure more broadly to the adoption of crypto, the real world use cases of crypto, and the integration of crypto into the incumbent financial infrastructure.
100%. And I think this kind of leads me to maybe a discussion around like, or just your thoughts broadly on like where we're heading. It seems like there's more, more but less tribalism than ever in crypto. If that makes sense. Like there's actually like layer one protocols that are very much so starting to collaborate together, and I think that I'm curious on your thought process there, because I think that shows us a little bit more maturity in this space. But you still have communities out there in the wild that are just openly battling against each other. But what are your thoughts just on tribalism? How this network of networks type thing will start connecting together with a lot of these different entities? Yeah.
It's a topic I love because, as you said, it was a really big thing when I started in the space, and it still exists. I've had, there are certain blockchains that are very verbal, and the enthusiasm is really is tangible. I think at the end of the day that there's a shift now because you have these different tokens, you have their networks. We are seeing collaboration. So I will go to one conference and see, various large, projects that are working together. But the access pipes really change that pretty meaningfully because now, again, through the ETFs, and this was the piece that I wrote about, my op-ed about, it does the ETF era usher in the end of tribalism in crypto. And, does that take the fun out of crypto? I don't think so. But sometimes now exposure is as simple as a button in a brokerage app, and it's the same button to where you can access, different ETFs, different cryptocurrencies through the same ETF wrapper. And so what used to be more zeitgeisty and tribal and ideological in terms of loyalty is quickly becoming, exposure management. And, I think over time, the new question may be not what's the best chain or what token is the best or what ecosystem is the best, but rather like as an investor, what is your exposure? What is your weight to digital assets overall?
Yeah, I think that alludes to, I mean, we just saw, I think, what was it, Bank of America, maybe this was like a month ago. I think with, their high net worth wealth clients, I think that Bank of America was essentially saying around 4%. If you have a risk tolerance around 4%, which might not sound like a lot to people that are hearing that, but for context, a few years ago, it wasn't even like 1%. So, I mean, it's kind of like the writing's on the wall at this point. And, I'm always interested to hear, and especially from you, such an industry expert, if you could just like, when you start to look into what all of these different entities are projecting as far as where we're going to be at from a tokenization standpoint of like real world assets on chain. You see varying numbers from like, I think 3 trillion by 2030, all the way up to like 30 trillion by 2030. What are just kind of broad thoughts on, and for context for those listening that might not be aware, crypto probably as a whole right now, excluding stablecoins, is somewhere around 40 billion, give or take, if I had to guess. So 3 trillion is like a 10x, and 30 trillion is obviously like 100x. But what are your thoughts on what we might see here by the end of the decade?
I think we've come a long way. Like the number, that you reference is still pretty up meaningfully from 2023. So for as much of growth as we've seen, I think there's still going to be a lot more growth because the last time I looked, if you think about all the assets that could be tokenized on blockchains that are actually tokenized, it's still about 0.01% or so. So the opportunity continues to be massive, and it's a theme I think makes sense to keep an eye on for 2026.
So I'm curious, Ray, as we kind of ramp down here, what are you looking forward to next year? Maybe just wrap it in a nice bow for us, which is, I guess, topically relevant because we're getting close to the holidays for people. What is 2026 going to look like? It seems, I agree with you. I mean, I don't know. I've been kind of a fan of the 4-year cycle thing because like until it doesn't happen, I'm just going to go with it. But I also like have been around, and if the 4-year cycle thing is in place, this would be my third one. And it just feels off because I remember like in 2022, Elon Musk going on to Saturday Night Live and was going to talk about Doge at the exact top of the market. And in 2018, Lipton rebranded to Lipton Blockchain instead of Iced Tea. So it's like, we're much further than that. But what are your thoughts for next year? And we certainly appreciate you joining us today, and hopefully we can do this again.
Yeah, I think so. I think that's my hottest take and Grayscale's hottest take is that this is going to be finally the year that we transcend this 4-year cycle narrative and that we have come far enough in terms of adoption, in terms of, again, real world, financial infrastructure partnering with crypto natives, regulatory backdrop, the need for crypto and as a store of value asset that, it's going to be interesting to see. But I think that's probably our hottest take for the new year, and that we're going to see, Bitcoin reach new highs in the first half of the year.
Well, I definitely want to drive people towards your 2026 outlook. But for those that aren't aware, grayscale.com, you can learn about all of the initiatives that Grayscale is facilitating for the adoption of digital assets. And Grayscale is an OG. I mean, I remember when I first got into blockchain and distributed ledger, Grayscale was very prevalent. And there's tons of research put out, but 2026 digital asset outlook is going to give you guys a lot of the statistics and numbers that you guys would want to see, which is right here. And then make sure you guys give Ray a follow at Ray_scale on X, consistently putting out good content. And Ray, we certainly appreciate you joining us today. Hang out with me for a second to make sure I get this recording. And you guys don't be strangers. You guys are welcome to come back whenever you see fit. So thank you so much.
Thanks for having me on.